The real estate and banking crisis in China is spreading to other aspects of the Chinese economy. The continuing real estate and banking crisis in China is starting to spread to the other aspects of the Chinese economy, with the real estate market in trouble, with many contracted apartments and houses not being finished, and contracted owners refusing to pay on the mortgages until the apartments are finished. The economic consequences of this crisis are starting to leak into the other part of the Chinese economy. On the main pillars of the Chinese economy has been the steel industry. For decades, the Chinese domestic economy has depended on the real estate industry to provide an outlet for the tremendous amount of steel produced by China each year. For the last 2 decades, the huge amount of constructions on skyscrapers, factories, huge apartments complexes, and dwelling have been able to set up the oversupply of steel produced by Chinese steel industry. Steel has also been a feedstock for the manufacture of the budding Chinese auto industry, as well as manufacturing key part of the autos produced overseas. The key indicator of the health of the Chinese steel industry has always been Chinese purchases of iron ore from overseas. In the year 2020, at the height of the COVID epidemic, China imported 1.17 billion tons of iron ore. In 2021, the amount decreased to 1.1 billion tons. In the first 5 months of 2022, China only imported 447 million tons of iron ore. This figure is down 5.1% from the same period in 2021. Some of those imported can be attributed to panic buying because of the Russian invasion of Ukraine. Experts warned that a third of Chinese steel mills could go into bankruptcy this year. According to a transcript being by Bloomberg, the whole sector is losing money and I cannot see a turning point for now. Amid with the decrease in the manufacture of finished steel products, in the increases in the inventory of finished steel products, which increased by 20.5 million tons in snapshot take of Chinese steel industry in June 1, 2022 to June 10, 2022. Chinese third on money. Money in the West is governed by the philosophy of a return on investment, which creates more wealth. Money is used as an intermediation between buyer and seller in China, according to the geopolitician Peter Zehan. Money is considered by the CCP as a political good. According to Mr. Zehan, investment decisions not driven by the concept of return. Conservatively, corporate debt in China is about 150% of GDP. That doesn't count federal government debt or provincial government debt or local government debt. Now, does it involve the bonds market or non-standard borrowing such as lending through like person-to-person program or shadow financing designed to evade even China's higher law financial regulatory authorities? It doesn't even include US dollar denominated debt that cropped up in the rare moment when Beijing took a few Buddhist steps to address the debt issue and saw firms sought funds and transform from outside of China. With that sort of attitude toward capital, it shouldn't come as much as surprise that China's stock market disconnected from issues of supply and labor and markets and logistics and cash flow. Simply put, in China, debt levels simply are not perceived as an issue. In China, money is a political good and only has value if it can be used to achieve a political goal. That political goal is maximum employment. This consequence, the concept of rare return or profit merging do not exist in China, and therein lies the danger. Eventually, the law of supplies and demand will win out, and the Chinese economy will have to face a correction. The longer it takes to face this economic correction, the greater damage that the invisible correction will cause to the Chinese economy. China faces a hurricane of economic problems, all happening at the same time, may lead to a sudden economic collapse of the Chinese economy.